Okay, let's go ahead and get into the stock market technical analysis. I'll go through the broad markets. We'll wrap up. Guys, drop me a thumbs up if you're finding value. I do appreciate that. It does help out the channel. And again, if you're interested in the private member group, I'm putting out individual trade ideas, comments in there pretty much every day. So, all right, let's get into it. All right, I'm going to flip over to the daily chart on Triple Qs. A couple things I'm seeing. I do want to point it out. It looks like we've hit the top of this move in Triple Qs. Here's the thing. This is a bearish engulfing candle right there. That's an outside day. That's a topping stick, a reversal candle. So we've got 45 minutes or so before the market closes. It's very unlikely we're going to negate this candle, but it's possible. In general, if this holds as a bearish engulfing candle, I would assume this is the top. So what I'd do there is just mark a trend line here and say that's our top. Stop out above the top. Otherwise, it makes sense to be short. Okay. The other thing is we do have this big sideways trading range right here that we were in for quite a while. We recently popped up, made a new divergent high. Very high likelihood to get sold into, and we're seeing that getting sold into as of now. So to me, it tells me that we're likely going to recover back into this trading range, head to the bottom of the trading range at a minimum. All right, bottom of the trading range would be the target, the minimum target right there at about. Let me extend that out, and that's about. All right, right there. Sorry guys, the trading view is not playing nice to me. 433.50 or so would be the bottom of the trading range. So that's what I'm seeing as of right now. And then the big culprit, Nvidia, let's look at that. Nvidia had earnings today, gapped up, but this is a shooting star doji is what it looks like as of right now. That's also a reversal candlestick, indicating that this would be the top of Nvidia. So again, what we would do is mark out the top and say stop out above there. But otherwise, it makes sense to potentially be short on this one, on that topping stick. And with more downside to come. Probably mark out, we also have this uptrend line, so I would say likely what would happen is we continue to sell down tomorrow, hit that trend line. Buyers will probably step in there for a small bounce. But ultimately, again, this would be a topping stick, so it tells me we are likely heading lower here in the near term. Okay, so those are the two biggest things I'd be watching is obviously the Triple Qs, this bearish engulfing candle, as well as the Nvidia doji stick. Let's look at the interest rates, TLT. You can see here, again, nothing's changed on the bonds, all right? We have a downtrend. We are at resistance. We've been there several times before, and the trend is still intact. Downtrend in bonds means rising interest rates, means the interest rates, the trend is up in interest rates, which should put pressure on the market. So unless we see a change here, that remains, all right? And it's remained pretty much for the last week and a half or so at resistance. Quick little trade idea here on NTR. Basically, this one has been rallying. You can see we've caught this entire rally here. It's up over 15% or so on this latest move. When I see the hourly chart, you do see we've got some negative divergence starting to show up here on the hourly, and it's pretty obvious. And we have a potential uptrend line to look at right here. Support, and we're just below it now. So we'll see how we close. Might be another push higher. We might actually break down and come in for a correction on this one. So, with the divergence there on the hourly and starting to break down, it's possible that we're going to have a correction. It's becoming a little more probable that we'll have a correction, although this, I can't say is a break of trend. We're just below it, and we could recover it. So just keep an eye on that one. Home builders, as we, again, here's the thing. XHB, this is the home builder ETF. Talked about this one yesterday. We had a sell signal right there. Break of trend and sell signal. Negative divergence told us that sell signal was likely coming soon, and there it is. And we're seeing more selling today, so very high likelihood, very high probability we're heading down to this level of support. It's about 150, likely get a bounce there. But the bigger picture is this uptrend is now broken, and I would anticipate the start of a downtrend. So that means, head down to support, bounce off support, and, you find bounces along the way, but ultimately trending lower over time. down to probably about this 90.35 area. So we will keep an eye on that. And then if you go to the individual home builders like PHM breaking down, was that support yesterday? Just a brief pause, but I didn't think it would hold, especially with the ETF breaking down, and you can see down more today. So very, very likely. I like this target, 99.50, about $100. That remains my target. Schwab. So if anybody's been following along for a while, this has been a trade setup for quite a while. Talked about it, bearish rising wedge, negative divergence. This is all the things I look for. We look for the sell signal. We got that sell signal yesterday. That was pointed out in the private member group for sure. You can see down big today. Again, 4.5. I think we're coming into some support right about 71.11. I can see this lots of trading days where it held that support. And then also there's a reaction right there from the past. So, it probably going to get a bounce, I would think, tomorrow in this one. Yeah, so that's what I see on that. But again, from my perspective, it's sell the rip. So, stocks will bounce even as they're falling, you're going to get bounces. The projected target, you take the widest part of the wedge, which is about right here. And that projects us down at the point of the breakdown to somewhere down here around the 61 area. So that would be the projected target for the measured move, basically. So again, I think we could bounce, tomorrow, or especially if we close on or near this 71 area, could get a bounce. But ultimately, sell the rip. All right, so maybe bounce, and it just depends on how you want to trade it. If you're a swing trader, trend trader, you don't have the time, then you just write out the bounces. But ultimately, I think we bounce, probably get a little bounce there, and work our way down to the measured target. All right. Keep an eye on this one. This is Eli Lilly, LLY. It's been a mainstream favorite. Again, to me, it looks very similar to the triple Qs. You've got a new high in price right now. It's been there for the last couple of days. It's a divergent high, so I would look for this to get sold into. For me, the sell signal comes on the break of this trend line right here. You can see going all the way back to March of 23, several tags of support. I've got them kind of marked out. With this divergent high here, I think we're going to get that sell signal, which to me is a break of that trend line. So I'm just watching it now. It's a trade setup, so keep it on your radar. And I've talked about this one, Abercrombie and Fitch, ANF. Again, it's just been walking up this daily trend line here. Clean and clear, negative divergence is intact, and we have earnings coming out. So, it might break down before earnings. Keep an eye on that. I think it's going to break down soon. And maybe what it'll do, at the end of the day, if you see a breakdown, and if it happens before earnings, I think you're going to get something like this, a big breakdown, a sizable breakdown, earn it right before earnings, and then earnings, they'll pop it back up, and then it would probably be a sell the rip, because again, the breakdown would be a sell signal, but they could rally it back up into resistance on earnings. So that's one possible scenario. Another possible scenario is it could just hold this trend line into earnings and then gap down on earnings, break down on earnings. That's another scenario. And then obviously another scenario is it could gap up on earnings and maybe even burn through the divergences. That's the least likely scenario because these divergences are there for a reason. They're telling us momentum is fading. So that's that's what I'm watching for. Here's Affirm. I talked about this one the other day. You can see here support, shelf of support right there, and a clear sell signal. All right, we had negative divergence back here, but ultimately that's breaking trend and it looks like a sell signal to me. Earnings is out of the way, so I'd say this is heading down to this 25 area. That support comes from some previous reactions there, so that's what I got on that one. Someone asked me to cover ELF. Now, if you guys remember, we shorted this and I covered my short when we hit support, and I don't remember if it was right here at this level 164, if it was down here, but in general I did cover my short because I figured we'd get a bounce, and the chart was just kind of holding up. Earnings came out, they pumped this thing right into resistance from what I can tell, because look, big breakout candle there, you held support there, you finally failed, and boom, they hit that today, and so far getting sold into. So if you could short it there at 187, that was the objective area to short. And yeah, I mean, they could push it back up there, but again, that looks like resistance to me. So, if you can get a position there, I can see this thing coming back down. Okay, so that's the usual suspects. We can look at gold now, and gold miners here, GDX. Negative divergence here, all right? There's an uptrend, and there's a breakout trend, sell signal. All right, so I think that's a sell signal today. We're kind of at support now, maybe a little bounce here, but in general, looks like sell the rip now in these gold miners. That's GDX. And then also I said the futures, you want to watch those, and here you go on the gold futures. Same thing, negative divergence, nice little uptrend to watch, and boom, sell signal. Nice impulsive breakdown there in gold. So sell the rip in gold as well. So you can see some support right there, about 22.87. So you likely get a bounce there. But I think gold is going to have a correction now and come in a little bit. So, and then all these miners, you can see they're all down together today. I pointed out some of these individual miners in the private member group yesterday. So again, I'll keep those to the private member group. Oil, you can see here's USO. We have oil futures, but USO is the ETN or ETF. You can see it's at support. Some reactions right through here. There's another one, and right there at support, and the 200-day moving average. It's kind of dual support. So this is an objective area to go long on USO oil with a stop below that. If it breaks down from here, you stop out. And that's it. But otherwise, it makes sense to go long here for the next move higher. So I like oil. I like USO right here. Marriott, this is travel stocks. They're all down today, but Marriott is the one that the chart looks pretty clean. So, you had this negative divergence that was signaling the reverse of a trend during this uptrend here. We started to build divergence, broke trend. So that was our first sell signal. And then they back tested the trend line once, made another divergent high, put in a secondary trend line, broke that. It's downtrending now, and we're closing. Looks like we're going to close today right at support, but we'll see. They might break it down, but in general, you can see, look, support, and right there now. So any lower than today's lows would be the next sell signal, and I think you just pretty much have a flush right to the 200-day moving average, about 222.60. So that might come tomorrow. Keep an eye out for that. There's potential there for a trade. But it's at support. So again, you need to see the lows get taken out from today. And it's about 4% to the downside to that 200-day moving average. Ultimately, I think we go lower than that. There's a trend line to look, kind of a longer term uptrend line. I have it marked out. So, but I think you get a bounce at the 200. I think you hit the 200, bounce to resistance, hit the 200, maybe a little bounce, and ultimately head down to that major trend line. All right, so that's how I see that playing out. And really, that's about it. That's all I see as of today. So again, keep an eye on Nvidia. Keep an eye on that bearish engulfing. If those remain intact, then I would say the tops, the near-term tops, going back to triple Qs, we can just mark out the high and call that the top. Now, again, we'll see how it closes the day. We got 20 minutes left, but this is a bearish engulfing as of right now. So what you'd want to see to help confirm is more selling tomorrow, basically, to help confirm that as a topping stick. And if it doesn't, and again, if it continues to rally and you take out those highs, then it's not the top. So if you're going to short this market because you're shorting that bearish engulfing, then you'd want to set your stop above that a high on a daily close. All right, that's all I got. I'm going to leave it here, and I'll catch you guys on the next one. Take care.